How you want to get started, Randy?
Let's do it. All
Awesome. Well,
right.
thank you everybody for your time. Today we're doing the 60-day captive insurance countdown, the cost of waiting. My name is Jackson Arms. I'm with CSE Services, and today we got Randy Sadler, the man, the myth,
Oh,
the legend, as our speaker. I will remind everybody to please keep your computer and phone on mute unless you're asking a question, but let's dive in. Just a little bit of background on me. I've been in the industry for about 15 years, spanning multiple industries, and now leading the captive insurance and risk management strategies with Randy. And Randy, you want to pull up your
yeah.
show
Thanks,
as well?
Jackson.
Tell me a little about
Yep,
yourself.
absolutely. Jackson, thrilled to have you on board. Jackson just joined the team here at CSE Services. We are ecstatic. He's already learned a lot about captive insurance and just thrilled to have him on board. My name is Randy Sadler. I'll be a guest today on the program, and I have been at CSE Services for 13 years, and we have, in the time that I've been here, grown from managing 30 insurance companies to right at 200, and it's just been a great journey. So we're honored to be able to share with you about the power of helping businesses own their own insurance company, protect from risk, keep a lot more profit, be far more resilient, and that's very important in this day and age. A few disclosures here, no surprise, these come from our attorney. So it's important if you form an insurance company that you do so for risk management purposes. And we're going to focus on risk management today and the power of a captive to help protect risk. If you do work with CSE Services, we do incorporate some third parties that will act on the behalf of the captive owner and not on our behalf. And so those third parties really are not under our control. And so we do disclose that we're not doing everything in the process, but there'll be other independent experts, attorneys, actuaries, and tax audit CPAs that you rely on. Okay. So Jackson, tell us about CSE Services.
So CSC Services, we're a risk management and consulting firm. Basically, we do everything that you need to set up an insurance company for yourself. We manage those. So, like Randy was talking about, the third parties, we bring in everybody necessary for you to run a compliant insurance company that is your own insurance company. We've been helping businesses set up their own insurance companies for nearly 2 decades. And just like Randy said, we just hit our 200 benchmark. So, and hopefully 300 is not far behind it.
There we go. That's right. The more business owners we help protect their business, the better. So, as some of y'all know, we mentioned the importance of doing an insurance company for risk management purposes. And one of the reasons for that is that the IRS may scrutinize your insurance company. Uh, our firm will do everything we can to stand up for the industry, stand up for business owners that want to protect their business. And that includes, if you look us up on the internet, even suing the IRS back in 2017 over a notice called 2016-66 that harassed small insurance companies. And that lawsuit went all the way to the Supreme Court. We won 9-0. The IRS had their notice thrown out. And so I want to make very clear that we are willing to take on what we believe to be tyranny when it rears its head, and we'll continue to do that as long as we're able, with the goal of helping business owners act in the best interest of their business and, importantly, their employees. So, Jackson, maybe mention a few of the awards we've won over the years and how we've won those awards.
Absolutely. So we've won Captive Manager of the Year 3 out of the last 5 years. And we've had some very important benchmark cases that have given us those awards, including the Supreme Court win that Randy mentioned. Um, we're anticipating possibly another award this year with some exciting captive structures that we created in the restaurant business, which I believe you can find the press release on our LinkedIn profile.
Absolutely. Very good. Very good. All right. So, what are we covering today, Jackson?
Well, three basic questions. What is a captive insurance company? Why the 60-day countdown? And what is the cost of waiting?
That's a really good point. We do the 60-day count. We've done this every year for, wow, maybe 10 years. And every year I get a lot of notes coming in saying, "Hey, the 60-day countdown's on. This is exciting." And sometimes it's good just to pause and say, "Why are we doing the countdown?" But this time we're gonna answer that question a different way, which is, what is the cost of waiting? Because very often I hear business owners say, "Ah, man, we need a captive really bad, but we're going to do it next year," right? And sometimes waiting is not necessarily the best thing to do, right? So let's talk about that. All right. What's our first question today, Jackson?
What is a captive insurance
All
company,
right.
Randy?
Yeah. What is a captive insurance company? Let's let you answer that in your words, and then I'll pull a slide up. What do you think a
That's right.
captive is?
So a captive insurance company is basically where we set up your own insurance company that you own and you can buy your own policies from,
Exactly. You're able to own your own insurance company. So
which
what's really
includes holding your own real estate license, which opens up.
It's like having a license. That's right.
That's
That's
right.
right. So when you own your own insurance company, it receives a license. That license allows it to do several things. One, have access to reinsurance pools, access to reinsurance markets like the Lloyd's markets. It also allows you to be taxed as an insurance company. And these are all powerful benefits. Captives have been around since the 1950s, so it's important to note that they're not new. And they've been growing because, let's face it, insurance is tough. Costs are going up, markets are hard, and businesses have to do everything they can to survive, right? So, what are some of the things the captives do, Jackson? I know we've talked about this a few times, but give us some of
Yeah.
the highlights. Yeah.
Well, yeah, some of the highlights, we can replace commercial insurance. We can insure enterprise risks that you typically can't get over the off-the-shelf, over-the-counter products. We can insure warranties. We can issue performance bonds. And depending on how many employees you have in your company, you can roll in healthcare. Or the great thing about a captive is it's a la carte as well. So you can do as many or as little policies as you want to have.
Yeah, very good point. You can do everything on this page, a couple things on this page, one of the things on this page. It's amazing what a captive can do for a business, right? So here's a simple captive structure, but obviously they're going to be far more complex than this. But in simple terms, shareholder or business owners own captive, and they own business, right? Business buys insurance from captive, captive issues insurance policies. Now, there's clearly going to be more complexity than this because almost any insurance company is going to be backstopped somehow via a risk pool, risk sharing, via fronting carrier, via reinsurance. So almost never are you, so to speak, walking alone. But nevertheless, this is the structure can be this simple in its simplest form, right? All right, very good. Now, this slide here is from ready.gov, which many of you know. Our federal government encourages small, mid-sized business to be ready for a wide range of risks. This isn't our slide, it's theirs, came right off their website. And so still very relevant today, especially if you think about the last, say, decade and how many disasters have occurred, both nationally, internationally, and maybe even locally for you. Of course, the pandemic, the scars from that still ring deep, right? So a captive is able to insure what we call enterprise risks. And Jackson, maybe walk us through about 4 or 5 of these enterprise risks, and just so our audience can wrap their minds around them.
Yeah, so basically we're throwing it in simplified terms into two buckets, operational risk and strategic risk. Um, you can see on the slide some of the main key ones that you might not have heard of before or not think of every day is like cyber risk, reputational damages, employment practices, litigation defense, and that's on the operational side. And then also the strategic risks, like a business interruption, a key contract termination, loss of a key customer. All those things can impact your revenue, and ultimately you can be protected through initiating policies through your captive to cover for those risks.
Yeah, very good points. If you think about, typically when we think about insurance, it's common to think about work comp, auto, general liability, maybe property, sort of the coverages that you have to buy. and you have to buy them because somebody's making you buy them, right? To drive on the roads, the state makes you have auto liability that's admitted in the state. If you have property and you have a bank loan, they're going to make you have property insurance to protect, their money too, right? Well, that makes sense. So think about this, and I think this is really important. Very rarely will any of those four things put you completely out of business, right? Many of the things on this page are things that will knock you out of business or severely hurt your business, and yet very often businesses are vulnerable for these things, right? Well, does it make sense to stay vulnerable? We don't think so. We think it makes sense to insure and protect the business, right? All right, good. Now, I alluded to this earlier, but I mentioned that not only do insurance companies give you access to reinsurance or to risk pooling and the ability to write insurance, but you're also, provided the insurance company structured properly and you seek advice from your tax advisor, you can elect to be taxed as an insurance company, right? So, Jackson, we were talking about this on the break. When you drive into Cincinnati, what are some of the biggest buildings you see coming over that hill? Um, what comes to mind?
They're all insurance companies.
A lot of insurance companies, right? The stadium's pretty big, right? Yeah, and there's some big banks, right? But man, insurance companies dot that skyline, and they dot a lot of skylines, frankly. And there's a reason for that. Insurance companies receive in premiums, they reserve them for the future. They don't pay taxes on those reserves. Those reserves are determined by actuaries. They invest and grow that money. They eventually pay claims. When they can't justify the reserves, they're then taxed at ordinary C Corp rates, right? So that reserving, if or deferral, if you will, enables them to invest and build up a lot of money. And not surprisingly, this is one of Warren Buffett's strategies, right? And so Warren Buffett bought Geico, as many of you know, and other insurance companies as well. And he recognizes the power of insurance. A small insurance company can actually elect to be taxed under 831B, which you don't have to do the reserving and the deferral and then pay 21% tax or C corp rates. Simply can elect to be taxed in the zero bracket. So that's a really nice benefit for small and mid-sized companies as well to help them protect their business and self-insure. All right. So this is a quick slide, tale of two businesses, right? On the left, we have a business that does not own a captive. They have some basic insurance like auto liability, work comp, property, kind of standard fare, right? And what we're showing is taking $1 million of profit and just paying taxes and saving that money. And over 10 years, the business has almost $6 million, right? On the right, that very same business takes that same $1 million, owns a captive, and rather than just paying taxes and saving the money, they buy insurance protection through a captive for their business. And what you see here is a whole lot more protection, right? So they've got insurance for things like commercial crime and cyber litigation, receivables, like not getting paid, very important, right? Losing key accounts that they're vulnerable to, having their reputation damaged. All of these things are really, really important risks. If you get hit with one of them, you'll want to be able to file a claim to protect your business, which we'll talk about here in a few slides. But by doing that, right, and in this case, this business is making that 831B election. In 10 years, the business has $10.7 million. So what do you get from the left to the right? You get more insurance and more money, right? So,
And Randy, give them a couple examples that our clients have been
yeah,
able to take advantage of on some large um, catastrophic events over the last 5 years.
yeah, very good point. Yeah, what are some things that businesses have been taking advantage of? Well, this year we've got some clients that have filed claims for tariffs and the impact of tariffs on their business, right? So they bought insurance, they paid premiums in 24, they've been insured through 25, and lo and behold, tariffs were put in place, and that's been very hard to pass all that cost along to their customers. They're having to scramble to find new suppliers. And so the business interruption, the increased cost, or the lost revenue, or all those combined, the captive is paying for those losses. So I think tariffs is a big one that we've seen through the years. We've had medical practices that were hit with reputation damage, sometimes caused by overeager reporters who told a story that wasn't true, which required suing them to set the record straight, right? And getting an attorney to do that. It also required hiring a reputation repair company to bury all the negative ads and negative articles 50 feet deep on the internet. And one of those that came to mind pretty recently was about $400,000 for reputation risk. So that's definitely worth insuring.
What about
And
COVID, Randy?
yeah, well, during COVID, a lot of businesses were interrupted, right? Sometimes forced to shut down by the government. And they, if they filed claims on their commercial insurance, the question would be, did those get paid? And the answer is, of course, no. And there's a reason for that. Some of their coverages excluded pandemic, interestingly, right? And the second reason, quite often, was that they had business interruption as a clause in their property policy, but their property had to be damaged first before it would trigger. So it didn't do them any good, right? So for our clients, they were covered in their business interruption. They were covered via what's called broad form property that covered loss of access to property. And so in their cases, they had their claims paid. In fact, captives that we manage paid out almost $15 million during COVID that helped businesses survive. So that was huge, huge, huge difference between what you would have had in the commercial market. Yeah, good question though, Jackson. All right. So Jackson, what happens to the assets in your captive that aren't paid out in claims or expenses?
They lose everything.
That's right.
No, wait, that's what you're
No,
doing right
wait,
now.
that's the wrong slide. Yeah.
They keep everything.
Owner keeps everything. Yeah, that is the beauty of owning a captive. And I know you and I talked about this. Some of the key benefits of a captive. Maybe just give us a quick summary of what those are before we move on.
Yeah, so survival, that's a pretty important for a business owner. Stronger business model, more capital you have, the more money you have to bring you out of a tough time, the stronger you are. Get improved risk management. You're getting more insurance, you're getting more coverage than you would in traditional models. Improved cost control, insurance profits, asset protection, and then one that's important to all of us is wealth accumulation
Yeah.
and then what you can do with that wealth. Those are all very important aspects of a captive insurance company.
Yeah, they really are. I know we've talked about this a few times. Asset protection is one we often kind of, glaze over when we hear it. But the reality is, it's very hard for a creditor to attach to an insurance company they may have standing against your business. You may even lose your business in a really bad situation, and your insurance company may be the only money you have that survives. So that's very important for an entrepreneurial business owner. And cost control, interestingly, there's very often times when we help businesses control the cost of their property insurance, get their general liability costs under control. Another one is getting healthcare costs under control, and a captive can really help with that too. All right, very good. So
And we're seeing a lot of that right now. A lot of healthcare premiums are skyrocketing.
they really are. Yeah, yeah. Healthcare premiums are going up, and businesses are looking for ways to save, right? And so putting healthcare in a captive can be a way to do that without a doubt. So really, if you think about all the benefits that we just went through, it boils down to two big ones, right? Having more protection or more insurance, simultaneously having more money. If you could do that as a business owner, I mean, who wouldn't do that, right? Like, it's like kind of an obvious move. If I can have more insurance and more money at the same time, it makes complete sense to do so. All right, what's next on the agenda?
Well, why the 60-day countdown, which also goes to your previous slide. If you're getting more insurance and you're getting more money, then a lot of business owners want to do that. So now we have a 60-day countdown because everybody and their brother is coming to us right now trying to form to take an election in 2025. Right, Randy?
And that's a very good point. Why the 60-day countdown? Well, it's because it takes time to form an insurance company. We can't do these things and can't do an insurance company in a few days, right? We go through a very formal and detailed process. It includes a risk assessment, underwriting, actuaries pricing coverages, then identifying the policies that you're going to purchase, forming the insurance company, which requires a captive attorney, drafting policies, you pay premiums, you get insurance policies. Of course, you have to capitalize your insurance company, and so it takes time. So if you are a business owner or you are an advisor to a business owner, it's important to get moving if you want to form your insurance company in 2025. And so why the successful, I mean, why the countdown? I always like to kind of think about the story of the goose that laid the golden eggs. You know, many of you heard this nursery rhyme when you were children. In the story, of course, the owner of the goose decided to cut open the goose to get the eggs out. Obviously, that didn't work. But let's assume that they have a really good advisor, right? And that goose is really a successful business and it's laying golden eggs, right? Well, in October, November, into December, businesses are typically thinking about how to allocate some of those golden eggs, right? Because we've got a year, we've got some profit. So how are we going to allocate the golden eggs? Maybe capital expenditures, right? Maybe some goes to dividends and profits. Some of it might go to employee bonuses, right? Some of it might go to equipment purchases that we can depreciate, right? But really, what is the obvious, most logical choice?
Maybe
What do
protect
you think?
those,
Well, it's to protect that goose, right? I mean, if you've got a
right?
goose laying golden eggs, you should build a fortress around that goose. And that is exactly what a captive insurance company helps businesses do. Build a fortress around the goose. So it makes total sense, right? Kind of completely logical thing to do if you have a successful business. All right. So what's next on the agenda?
What is the cost of waiting, Randy?
What is the cost of waiting? So this year we decided to name our discussion the cost of waiting. Very often the discussion has been why even have the countdown at all? It's because it's important to protect the goose, and you don't have a lot of time left to do it this year. But let's go through the cost of waiting and think about what some of those things are. Well, there's a risk of delay, right? And that risk could be that you have a big loss and you're not ready for it. So, as an example, we had businesses call us up this year and say, can we get insurance for tariffs? Well, the answer would have been yes before tariffs started. But unfortunately, now we're in a high tariff environment. And so that's like a pre-existing condition, right? It's like having cancer and then wanting to get health insurance, you know. So it's really important to own the insurance company as soon as possible. Start protecting yourself from risk now. There's also a timing benefit. The benefit of early setup is that you can pay premiums this year and take the deduction for the insurance this year. Now, obviously, when we talk about deductions, it's important that you consult with your tax advisor. I'm not a CPA, nor is Jackson, but we'll be happy to speak with your CPA about your captive and about the laws around insurance and insurance taxation. All right. So, why does it matter? Well, there's challenges in risk management, right? Trying to protect your business. Insurance costs are rising. And a captive provides a powerful way to help control insurance costs, maybe replace some of your commercial insurance, insure some areas where you're the most vulnerable, right? And do it in an entity that a business owner owns. So you own the insurance company. You're not just writing a check to somebody else, and then if nothing happens, all your money's gone. So it is an extremely logical decision for a business owner to make, and it's going to build long-term resilience in the business, right? So, what are some of the benefits of acting early? Jackson, you and I were talking about this as well. A lot of business owners coming up on the end of the year, trying to allocate profits wisely. One of the best things to do is to protect the insurance company. I mean, to protect the business, excuse me. Yeah, and that's what a captive can do. All right. All right. So, um, that's why it's important to act now if you want to own your own insurance company. There's a lot of risk on the horizon. Captives provide many benefits, and the sooner you own your captive, the sooner you can address other risks, like let's say you form your captive for some property casualty risks, as an example, but then we're able to layer in healthcare because the infrastructure is already there. So you can start tapping into the savings of healthcare, and then you're able to add other coverages that are relevant. And we've had clients do that where they form a captive and then a year later they move their healthcare into a captive, and then the next year their warranty program into the captive. And then as they get more confidence, start insuring maybe their general liability, property, etc., in the captive. Okay.
Hey, Randy, we got a question.
Yep, hit it.
Doing it before 12/31, but what if you form it mid-year?
Yeah, it makes lots of sense to form mid-year. And the reason for that simply is that you can start getting insurance protection right away. So we have had quite a few clients form mid-year this year, and they're insured for the rest of this year, right? And then for many of them, rather than buying 12 months of coverage in June, they buy 6 months in June, buy 12 months in December, and so they're able to start protecting their business sooner. And then also, because of timing, they're able to deduct premiums for half a year and a full year, all in this year, which is a big win for them. Now, obviously, they consulted their tax advisor before doing that, but that's a giant win for them. Good question. Okay. All right. So we've talked about the benefits of owning a captive and the long-term value creation. And so the call to action is really think about forming a captive. If you're thinking about forming a captive in 2025, uh, don't wait. It's a chance to strengthen your business's resilience. And, what could happen, right? What could happen? Well, Jackson, you and I have lived through the last decade. Tell us about some of the things that have hit in the
Barely.
last decade. Yeah,
Oh, we got wildfires, the Texas deep freeze. I had a friend in that area of the country when that happened, and it's almost comical talking about losing a power grid and in a deep freeze in Texas, but it
yeah,
happened.
it did.
Um, Hurricane Helene, and then human disasters, civil unrest, the COVID-19 pandemic, international conflict. Um, just all kinds of tensions rising, uncertainty. And at the end of the day, that's why me and Randy enjoy working with the clients that we serve because we can help them protect their business more fully and wholly than if they tried to get that off the traditional insurance market. And at the same time,
Right.
they can build wealth to hit these issues head on.
And a very good point. When you think about these types of risks, it's hard to predict which one could happen. And so trying to insure for these commercially is just about impossible. Others include supply chain, very important. And if you think about the world we're in now, complexity, war, and other things, supply chains are often very vulnerable, right? It could be, and that includes tariffs, frankly, credit risks, not getting your bills paid, and not getting paid on your receivables, and now you've got to find a way to keep your business afloat without getting money you expected to get. Cybersecurity, huge, continues to evolve, always difficult. Even just inflation puts pressure on businesses as well. Um, we talked about commonly uninsured risks, and one of the biggest, of course, in the last decade, COVID. Uh, so we want you to know captive insurance works. Now, you can look this article up in Captive International. It's was put together by Jana Patel, who was working with us at the time as an intern, and Sean King, an attorney, CPA, and principal in our firm. And essentially, they did a study on how many businesses that filed claims for business interruption or COVID got their claims paid, and it was almost none in the commercial market, just about zero. There's a couple exceptions. But for our captive owners, everybody that had a claim that was legitimate got their claim paid. Almost $15 million of claims went out. And frankly, it just helped businesses survive. And Jana noted that not a single one of our clients went out of business during the pandemic. Well, that tells you something, right? Because if you think about the math and the odds of that, it's astronomically low because many businesses were put under during COVID, never to return, or if they did return, their employees didn't trust them and didn't want to come back to work. So, unbelievable what a difference having a captive made. Huge impact on the resilience of businesses. And if you request the slides, and we'll send them to you, there's a link here where you can go to Captive International, read this very article. All right, Jackson. So I guess we have a bonus question. Is that right?
Yeah. So Randy, who's a good candidate to own their own insurance company?
Right. Yeah. Who should own their own insurance company? Well, let's go back to our analogy, right? If you're a business owner and you have a goose laying golden eggs, or let's say you have geese laying golden eggs, and uh, you're a successful middle market business owner. And one way to think about it is you have something to lose, right? I mean, if you're starting a business and you're barely making money, your exit strategy is pull the plug. But when you've got a business that's making money, now you've got something to lose. It's time to think about protecting it, right? Uh, Ideally, gross revenues of 5 million or more, and this is largely because the business will need insurable risk for us to make a captive work, and let's call it 300,000 or more of excess golden eggs, if you will, right? So that can be used to build an insurance wall for the company. And many, many, many businesses qualify for this. Then you're likely a candidate that should explore owning your own insurance company for all the reasons that we mentioned earlier. All right, very good. Any other questions in the chat, Jackson?
Not that I can see.
All right, very good. Well, we've got a chance. My book, written with Noah Miller, ACI, another member of our firm, Fortune Favors the Insured. I'll be glad to send you a PDF or an e-flip book that you can flip through. I've had a lot of people say it's great airplane reading, so I'd love to share it with you. Just reach out to me, Randy at cscservicesllc.com, and say, send me the book, and we'll get that out to you as fast as we can. All right.
We appreciate
Anything else? Yeah.
everybody's time. Oh, he said we actually had a question just come in. Is that 5 million for a cell or a single parent?
Normally, what we do, it's interesting you asked that. So, we use what's called incorporated cell structure. So, we're not huge fans of cell captives in the sense of a series cell, segregated cell, protected cell. Pretty much all those structures sort of effectively trap the captive owner where they can't really move easily, uh, can't can't liquidate very easily, and can't move with it. Can't change managers without having a tax consequence in many cases. So we use incorporated cells, which are C corporations with tax ID numbers that you can move, and we think that's really better for the business owner. Frankly, if they want to fire us, it makes it easy to fire us. So it keeps us on our toes that we've got to do a really good job, right? Which makes tons of sense. So yeah, I'd say 5 million revenue or more applies to having an incorporated cell. But keep in mind, I mean, we've got clients that they're writing general liability, property, right through an incorporated cell captive in a risk pool. So it can be very powerful.
Good question.
Yeah.
But is there any other questions, you can drop them in the chat. But if not, you can send an email to me or Randy. We work as a team, and we're more than happy to set aside time for you or your clients to go through the different captive structures and the customers and clients you have and the industries that they serve. And we're more than happy to schedule calls with you. So feel free to reach out. And also, there's an office number if you want to schedule a call with us. But other than that, we appreciate your time. Randy, thanks for all your knowledge and um, input in today's presentation. And like I said, give us an email and give us a shout, and we'll be happy to help you.
Thank you, Jackson. Everybody have a happy Thanksgiving.
Thanks.
All right. We'll see you guys.